Well, hi everyone. Welcome to the Buffett and Beyond Research Saturday Market Recap Letter from July 6, 2024. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, the market, the end of the month, beginning of the first 2 days of the new month, upward bias period worked in our favor. Then there was the 4th of July holiday bullish bias, which was true to its usual upward cycle. With the market and the S&P and the QQQs at a new high, this coming week will test this new high and we will see which way this market wants to go. And our weekly stock analysis video, well, Eli Lilly has a weight loss drug, and folks, that always garners a lot of attention. And 2 diabetes drugs, which have caused this stock to rise 700% over the past 5 years. And when you think about a weight loss drug, well, a lot of those people who lose weight or too much overweight, their diabetes will correct itself, won't it? Yeah, so they've got everything going for them there. And yes, Lilly does grace our dividend growth and income portfolio. Yep, up 700% over the past 5 years. In our ETF video, you asked about the communication ETF, which is the XLC, but it is not nearly as good as you've heard, and you already have the top stocks in this ETF in other portfolios. You just don't know it yet. So we're going to take a look at that XLC communication ETF and show you that you already have the good stocks in this ETF. And here we are with the S&P 500, and you can see that we stayed the same for, oh my gosh, a couple of weeks in here, and then all of a sudden pushing back up again over that 5,500 level right in here at a new level right now as we speak. And I'm recording this just before the close of the market. Down here, we can see that blue line running parallel slightly above the red line, and that's bullish, folks. We look kind of like that. And let us look at the candlesticks, and up here, here's that 5,500 level, and you can see we're above the 20-day moving average, which is this green line, up above the 50-day moving average, above the 200-day moving average. And down here, yeah, we can see that this black line has turned up over this red line. The only thing that we don't like are, you see these vertical green lines. That this represents the volume when the market closes up for the day. And you can see they're starting to come down a little bit, so this market's getting a little tired in here. But it keeps going up, doesn't it, folks? And let's look at the QQQs, and here's this 485 level right in here, which broke through the new level, and the next day, right in here, it came down to test that level and then just shot right up again. So we come down here to this intermediate term indicator, and yes, we could definitely see the black line crossing over that red line. Again, here's these green vertical lines, which is volume on the up days. But don't forget, this is a holiday week pretty much, and a lot of people took off, so we can expect lighter volume in here. So this coming week is going to tell us a lot about this level right up in here. And when we look at the Dow Jones, yeah, we can see this has been a buy signal for a while now, and it's pretty much going sideways to up. So what they say, lower left to upper right. And then when you step back and you look at this, hey, this market is, and I'm talking about the Dow, is up above its 20-day moving average, above its 50-day moving average, and it seems to be staying there, even though it's down for today so far. Again, I'm recording this just before the close. We can see it's hanging in there and just bottom left or lower left to upper right, and that's the way it's going along with the other indices. And portfolio protection, we sometimes buy the SPY puts about 12 to 15% below the market just for disaster insurance. This is about $140,000 portfolio, and we buy one put, so the 3 puts could cover this, the SPY puts, which is 1/10 of the SPX, which is the S&P 500. So the SPYs are smaller puts, smaller in size, and we buy 3 of them for about $140,000 portfolio. And you can see that we've been riding up going higher as the market has gone higher. And again, this is disaster insurance. Some of you want it, and some of you just put it on when the indicators start turning down, and you say, all right, let me throw some protection on there and walk away in case there's some kind of real downdraft in the market, and then you're pretty much protected. So, folks, we had another good week. We're coming into the real summer now with that 4th of July weekend. So July and August, the dog days of summer, where the market doesn't do anything, but usually it's up about 1 or 2% over the summer. And this being an election year, you can never tell what's going to happen. So, folks, sit in that nice chair with a bunch of your friends, watch the waves come in. You stay safe, be with your family, be with your loved ones, have a nice Sunday dinner as a family, which is always nice. And most of all, stay safe, and we'll see you back here in a few days.